Alison, now that we've had just a little time to digest some of the earnings, it seems like investors are loving Citi. It's up 1.8% as the broad market improves. JP Morgan is now flat. Why is that?
Well, I think with the stocks, sometimes it's all about expectations, right? So JP Morgan had a very solid quarter. I think they're executing across their businesses. Credit was the standout surprise for them. However, just given where we are in this cycle, it's hard to extrapolate that can continue, especially when it's coming from reserve releases.
Now, the street was very excited about FIC. We got a nice bounce. But is there a level of interest rates at which point it is no longer profitable for JPM to lend, let's say, and that offsets any gains from FIC?
So for the lending business, there's a couple of different factors. So the increase in short rates has been helpful on sort of the funding side of things. So that helps expand your margin. Obviously, as long-term rates go higher and rates overall go higher, that can damp demand for financing. On the trading side of things, it's really the volatility. So rates moving up does have an impact. The yield curve does have an impact. But to the extent that we get volatility, and given some of the moves that we've had this quarter, we could be getting some of that. That's really the help that for trading.
Alison, Citi seems to have had a really good 4 weeks in FIC, and that caught a few people on the hop. My question is this repeatable? Because it looks like it was generated out of this recent move we saw up in yields that moved fairly quickly. If the market's now correct in its pricing of the Fed and the US economy, we're not going to get another repricing like that again. And that makes me wonder whether or not such a move is repeatable in terms of the numbers going forward.
So that is always the question with trading revenue in terms of, we get the quarterly results and then what does that mean coming into this quarter? Basically, what it'll do is just set the run rate. And again, I think it's all about volatility. This quarter tends to be a seasonally weaker quarter, so it's not as important as the first quarter per se. But, for the longer term view, it is volatility. So volatility that we've seen sort of a pickup a little bit in this quarter, can that continue? But looking into next year, what does global monetary policy look like? Could we see more questions around that? I think that's really what is going to give up the leg up long term.
As you say, JPM benefited because of the provisioning around credit. And as you say, that's not something that we can guarantee going forward. Jamie Dimon also talked on the call about the sort of pickup that we've seen from the tax story coming through into the numbers once again. Again, I just wonder whether or not that is going to be something that we can guarantee after the midterms. Is this as good as it gets for US banks?
So that's one of the reasons why we've been looking at loan growth. And to Jamie's point, they are benefiting to some extent from the tax changes. But I think investors coming into this year had maybe even hoped for more of a lift. And I think the question around the midterm elections is, there's the regulatory side of things. There's also the tax side of things. But will the elections have an outcome that just sort of supports continued momentum going into 2019? Or will we have some risk of reversal there?
What did any of the executives say about the president's comments on the Federal Reserve?
I think as far as the comments on the Federal Reserve, I think the most interesting thing might be Jamie's comment that he thinks that long-term interest rates at 4% is perhaps a more appropriate level. Previously he had said maybe 5%, so that's a bit lower. And then, also making the comment, obviously, any president is going to want rates to be lower, right? It's more stimulative to loan growth. However, I think, again, just looking at the broader commentary, the tax cut, the better regulatory environment has been very good for banks and has been very good for the economy.